good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, we're still in the early stages of 2026, and last week we would have taken a look at what would have occurred in equity markets in 2025. Today we're going to focus a bit more on a forward-looking basis, what could happen in stock markets in the year ahead. Now, it could be a somewhat of a mixed bag, and as we would have seen in 2025, international equity markets would have broadly rallied while the local stock market entered its fourth year of decline. Will that happen in 2026? Well, let's take a look at what Bourse is forecasting for the year ahead. And in 2026, getting straight into the local stock market, the overall forecast for the Trinidad and Tobago Composite Index, as seen by or through the perspective of Bourse, is a roughly 4% increase in that Trinidad and Tobago Composite Index, up from that 11.8% decline in that prior comparable period of 2025. That means the index level is going to increase on average from that 946 level at the end of 2025 to an index level of 982. Driving this performance at a more granular level would be a 5.3% increase in the All Trinidad and Tobago Index, accompanied by fairly flat performance in the cross-listed index, negative 0.8%. And of course, the cross-listed index comprises several companies that are domiciled or based in other countries, but also listed on the Trinidad and Tobago Stock Exchange. Now, some of the major drivers for the local equity market in 2026, there are quite a few. One, of course, is the question of economic growth, and economic growth forecast for fiscal 2026 for Trinidad and Tobago remain fairly tepid, between 1% and 2%, as forecast by the IMF, for example, as well as other agencies. Energy production recovery is somewhat of a significant question mark. It is a little bit to the downside right now, given that energy production is at the lower end historically over the past decade. However, developments in geopolitical developments within our neighborhood opens the door potentially to increase collaboration and increase access to volumes of gas and oil potentially, which could lead to some increase in energy production over the near to medium term. Rising domestic interest rates, not necessarily the best supporting factor for equity markets. With rising domestic interest rates, of course, investors do have another relatively attractive opportunity to earn a greater certainty of return through fixed income instruments like bonds, repos, deposits, etc., which might be more appealing relative to equities, despite compelling dividend yields in an environment where, after 4 years, there has been consecutive decline in stock prices over the Trinidad and Tobago Stock Exchange. Policy-driven earnings is another factor which could work for or against stocks in 2026. Of course, we're speaking about a slew of fiscal measures and initiatives which were announced in the fiscal 26 budget, which could have an impact on the earnings and financial performance of several stocks on the Trinidad and Tobago Stock Exchange. Of course, we're talking about fiscal measures such as fiscal initiatives such as the asset levy, as well as other increases in the cost of doing business, which could ultimately filter down into consumer demand. Compelling dividend yields is one of the positive drivers for Trinidad and Tobago Stock Exchange or stocks on the Trinidad and TTSE. Of course, with dividend yields having consistently increased over the past several years, despite those price declines, financial performance on average has actually improved for many of those companies listed on the Trinidad and Tobago Stock Exchange, and that has driven up overall dividend yields, which is something that might be of an attractive feature to investors positioning for the long term. Geographic diversification initiatives is another positive driver for stocks, and it doesn't apply equally to all stocks on the TTSE, of course, but there are several companies who have made a very intentional drive to diversify beyond the Trinidad and Tobago in terms of stabilizing revenue streams and growth in earnings, and that will also be somewhat attractive to equity investors who have a longer term view of things. Now, when we take a look at drill down a bit further and look at sector performance or sector forecast for 2026, we can see that banking, which accounts for over 50% of the value of the Trinidad and Tobago Stock Exchange, is forecast to increase on average just about 4%, with a range of performance in its constituent members between -3% and a positive 11%. Conglomerates accounting for over 20% of the Trinidad and Tobago Stock Exchange pretty much even keel forecast for 2026, advancing on average just about 1%, with a range of performance of -2% to a positive 6%. Non-banking finance, which accounts for about 10% of the Trinidad and Tobago Stock Exchange value, expected to advance on average about 4%, with a slightly narrower range of between 0 and 5% in terms of performance, and manufacturing and trading with the widest range, -2% to positive 15% on average, expected to advance just about 4%. So in the banking sector, for example, there are 5 constituent members. There's 1 stock that is rated overweight by Bourse and 4 market weight conglomerates. All of the stocks are currently rated market weight. Non-banking finance, I believe, all of the stocks are also weighted market weighted. In the manufacturing and trading, on a combined basis, nine constituent members with 1 overweight rating and 8 rather market weight ratings. Turning very quickly internationally, well, there are a couple major drivers falling, which could propel markets further positively into 2026 after 3 very positive years of performance, one of them being economic growth, which is expected to slow to some degree, but still be relatively positive around that 2% level. US dollar interest rate cuts, or policy interest rate cuts in terms of the Fed rates, is expected to occur, with at least 1 more cut expected in 2026, and that should be broadly supportive of equity markets as we move into the new year. Trade policy normalization after a very volatile 2025, with some of those tariff back and forths between major trading nations. We expect some de-escalation of those relationships and thawing out of those relationships at a trade level, and that should also be broadly positive and supportive in terms of expectations and investor sentiment as we move into the new year. And of course, geopolitical tensions, that is something that is rapidly evolving and could have more likely a downward effect on average in terms of investor sentiment and overall stock market direction than an upward one, given the very nature of that particular driver. So for 2026, consensus estimates for the S&P 500 put the stock market forecast at just under 10%, 9.4%, in fact, with a low estimate of a decline of 12.4%, and a positive or upper forecast of just about 20%. And this follows on the heels of 5 years of, in general, very strong performance coming out of COVID, a 27% increase, followed by a 9% decline, but then 3 consecutive years of very strong double-digit returns for the S&P 500 of 24, 23, and 16.4% in most recently concluded 2025. So overall, for investors, international outlook seems on average to be very positive. There is some cautious optimism at the local level in terms of some level of recovery in stock market prices and valuations. For the local stock investors, stock selection remains key. Not all stocks are or will be priced equivalently or for the same value. Of course, focus on that value bias. Look for stocks that offer you a consistent, credible, and attractive dividend yield. So that dividend focus comes into play, particularly in a rising interest rate environment. Look for stocks with those built-in diversification benefits, and of course, those companies that are pursuing acquisitions or diversification outside of Trinidad and Tobago as well, for an added degree of protection at the international level. A core satellite strategy, including blue chip names, as well as broader market exposure through market exchange traded funds or ETFs, and regional diversification are always a good way to go, as we would have seen in the last slide. There has been very strong market level performance as dictated by the S&P 500. Well, that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com, and of course, you can check out all of our research absolutely free on our website, bourseinvestment.com. So, and of course, you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.